they tend to prefer exponential moving averages because they react faster to price. So there's just less lag. These are the two most popular types of moving averages: simple moving average, exponential moving average. Simple moving average is just determined by dividing the closing prices for each day in the look back period, while the EMA gives more weighting to the most recent prices. So therefore, if you plot both moving averages on a graph like you see here, you'll notice that the EMA, which is the blue line, it hugs price a little more closely and reacts more quickly to price changes than the simple moving average. Because the EMA, again, puts more weight to the current prices or the more recent prices. And for traders, the more recent prices are extremely important. I wouldn't say they're more important than, a week or two ago, but more recent price action is really what is going to determine when a swing trader takes a position, whether it's a breakout or a change in trend. You have your moving average crossover, for example. So here are 5 key ways to use moving averages. First, define and invest with the trend, whether the trend's up or down, and determine how strong the trend is. Now there are, and we'll look at, I think it's the next slide, the different types of moving averages that I think you should pay more attention to, because it says define and invest with the trend. Well, if I want to buy a stock, I may look for a short-term pullback within an underlying long-term uptrend. So my long-term trend is going to be up, but maybe my short-term trend is going to be down. And that may present a nice buying opportunity when that short-term downtrend ends, right? So if you think about what does price do in a long-term uptrend? And this is going to sound very basic, but it goes up more than it goes down, doesn't it? In a long-term uptrend, price is going to go up more than it's going to go down. Okay? So it's those times that the stock price falls that just basic math is telling us that it's likely going to be just a pullback and the stock price is going to continue to move higher, right? Because you're in this long-term uptrend. So you're going to look for you're going to pay attention to different trends. Okay, short-term trend, intermediate-term trend, long-term trend, and determine how strong each trend is. Number 2, moving averages identify buy and sell signals. Very, very straightforward. You know when it is the safest time to buy and when to consider selling. So price crossing above a moving average is a bullish buy signal. Price crossing below a moving average is a bearish sell signal. If you're a short-term trader, price crossing below the 20-day simple moving average might be a sell signal for you, right? But if you're a long-term investor, that's not a crossover that you're going to pay attention to. You can also combine moving averages to identify buy and sell signals. So moving average crossovers, instead of price crossing above or below a moving average, you're having another moving average, a shorter-term moving average, crossing above or below a longer-term moving average. That's giving you a buy signal, buy and sell signals. Okay. Determine broad market conditions. You can apply moving averages to the overall market as well. Okay. Is the market healthy and in an uptrend, or is it in a downtrend? And price in relationship to moving averages help us identify that. For example, the S&P. The S&P has the price of the S&P just recently crossed above its 50-day moving average. A 50-day moving average is a pretty significant moving average for institutions. They rarely take trades, if at all, if price of the stock, for example, is below its own 50-day moving average. So it's a very bullish signal when any stock or market or ETF price crosses above that 50-day moving average. Now you're entering into a nice emerging intermediate term trend. So you're applying moving averages on the market just like you would on individual stocks. Is the stock near support and resistance? So moving averages can serve as support and resistance as well. No, not the horizontal support and resistance zones that we're used to when we apply, let's say, the VectorVest support and resistance indicator to the chart. Moving averages are moving support and resistance, not stagnant. So you may notice, you have may noticed before, a stock that you like, it pulls back a lot, but it stops at the 20-day moving average a lot too. So that 20-day moving average serves as a support level for price as price continues to rise. So taking profits after price is overextended and waiting for a pullback back to that 20-day moving average is a strategy. And you can just kind of flip that up, if a stock is in a downtrend. Stock is in a downtrend and is below the 20-day moving average, for example, but you get a short-term uptrend where price approaches it but fails to cross above it, and you got another rip lower. You may see on a chart that happens 2-3 times in the last couple of months. There's your signal to maybe short a stock. And then finally, is price overextended? Determine if price is overextended and far away from its mean average. So, and you can see this more graphically on a chart when price is moving further and further away from, shorter term moving averages. Again, it is just math, right? It's a mean average. So, the further away something gets from its average, the more likely it is at some point in the near term to revert back to it. And it depends on the term or the time frame that you're looking at. So we say define and invest with the trend. So here are a number of different moving averages that you may want to consider. If you're a short-term trader, a 3-day EMA and an 8-day EMA. Those two moving averages identify short-term trend. The moving average, the longest term moving average is no longer than 2 weeks. So you're talking about a week to 2 weeks of price direction. So if you're a short-term swing trader, those are two moving averages that you may want to consider. Taking trades when the 3-day EMA is crossing above the 8-day EMA, buying stocks, being bullish. A medium short-term moving average, kind of an intermediate short-term moving average, is the 20-day simple moving average. You can also put the 20-day EMA as well. I know there are techniques and strategies that use a 20-day EMA, but your 20-day simple moving average serves the purpose as well. Okay, so that's kind of your medium short-term moving average. Then when you continue to move higher there, you get your 50-day moving average. That's more of an institutional support and resistance moving average, where again, institutions will begin to take positions when price crosses above the 50, and reduce exposure when price crosses below the 50. Then you get your intermediate and institutional long moving averages, the 100 and the 200-day. I'd even throw the 150 in there as well. 150-day moving average. So your 100, your 150, and your 200-day moving averages are your long-term moving averages. Your 50 is your institutional intermediate term. You got your 20, which is your mid-short term, and then the two EMAs, the 3 and the 8, that's your short-term moving averages. So you can see here, and you can see the color codings here. Let's just look at the hard left edge here. That's a prevailing uptrend. We don't even have price on, but moving averages are based off of price. So we can just tell that price is rising. It's above all of its mid to long-term moving averages. Here's a situation where the brown line, remember, is that 20-day short-term moving average. So if you're a swing trader, here's kind of a little, something to consider. If I wish I could zoom in here, let me just do something here. If I could zoom in just to this area here, right, where you had price above your 20, your 50, your 100, your 150, but you see the short-term correction or a short-term softening that occurred here. Your 3 EMA is the 8. Your red EMA is your 3 EMA is the green. The red EMA is the 8. And you saw the little squeeze that occurred, didn't you? As price kind of softened and pulled to the 20. Well, it looks like that 20 held nicely. You had your squeeze, and then the trend continued. And that's when you want to start to participate again. And this little bearish crossover here could have been an opportunity maybe to take profits, but it stayed above the 20. But you get these short-term softenings where as long as the 3 is above the 8 and price is above the 20 and you have those moving averages sloping upward, you can feel pretty confident about your opportunity being long. Let's move over to here, right? After each trend one by one begins to break down. The 3 EMA and the 8 cross below the 20. The 20 begins to roll over. You can just imagine what price has done. It's crossed below the 20. It's approaching the 50. Price crosses below the 50-day moving average. Now you have your 3-day EMA below your 8-day EMA. And you see this bullish crossover here, the 3-day EMA below the 8-day, the 3-day EMA crossing above the 8-day EMA. That is not the same signal that you would get back here or back here. It's the same crossover, but you should not interpret it the same. Because now what your short-term, your mid-term, and your long-term moving averages, trends, well, your intermediate now is down, and your mid to short-term trend is down as well. These bullish crossovers with your short-term moving averages aren't signals that you should take. The bearish crossovers, the bearish short-term, I could just fast forward. The bearish short-term crossovers are the ones that you should consider using and following to take short positions. Does everybody understand that broad concept, right? And that's how you combine moving averages with each other. Paying attention to the intermediate and longer-term moving averages and using shorter-term moving averages as your buy and sell signals. Okay, this is going to become a little bit more clear when we talk about the EMA squeeze here next. Ken says, I would say volume is very important too to determine the strength of the move. Sure, and that's another thing to consider, absolutely. And now, not only is volume important leading up to the signal, but the day that you get the signal, you want a strong volume day there as well. Okay, so in both respects, but yeah, sure, leading up to getting your bullish signal. Remember, these are moving averages which are lagging, so price is already going to have to be moving in one direction for a little while before you get your signal, and you want volume to be accompanying that, higher volume. So let's talk about the EMA squeeze. The EMA squeeze trading strategy, it uses 3 exponential moving averages. Uses a 5-day EMA, an 8-day EMA, and a 13-day EMA moving averages. And you also uses a 50, and we'll talk about that in a second. After a pullback or quiet period where those 3 moving averages have squeezed together, they start to pull apart and fan out and begin to trend up. That's what we look for. Using the slope of the 3 moving averages after a squeeze, we can predict if a significant trend change is underway and whether it is likely to continue. A strong upward move increases the probability of a successful trade. So, I'll add that you want volume to accompany that strong upward move. Here are the buy rules. Again, this is a complete trading system. Buy rules are: you need the 5-day EMA to be above the 8-day EMA and the 8-day EMA above the 13-day EMA. So think about, or just kind of remember what we just went through in terms of your short-term moving average being above your longer-term moving averages, what that means as in terms of your bias and the trend itself. If the short-term moving average is above the longer-term moving averages, price is rising. Now here, we're just looking at a 5, an 8, and a 13. But you know that price has to be moving higher here, and we want those 3 moving averages in that position. We also need price to be above the 50-day moving average. So in the chart earlier where the stock was in the prevailing downtrend, right, that graphic with just the moving averages on it, And those two situations where I pointed out where the short-term moving average crossed above the longer-term moving average, but I said that wasn't a signal that I would consider taking because price was below your 50-day moving average. So we need price to be above the 50-day moving average. What does it mean, or what does that do for us when price is above the 50-day? It gives us a little bit more of an edge and a higher probability that the bearish short-term price action that we're seeing will only be just that, just kind of short-term, and that we're moving higher and the intermediate term trend is up. So it's more likely that the stock price will continue to go higher. We need our RT indicator to be trending higher as well over a 3-day period. Okay, that's part of the setup. By the way, I'm going to show you guys, and this is going to be a part of the course, and we'll talk about the course again later. But we have an EMA squeeze. We have scans that find stocks that meet this type of setup, along with a lot of the other techniques that we teach in the course. You'll have scans for, just to give you guys a heads up, so you don't have to worry about, hey, if you guys teach me this during the course, how am I going to run it? How am I going to find my stocks? Okay. We want the market to be in an uptrend as well. For example, we want the DEW signal to be up, which it just turned up recently. But we want the market to be in some sort of an uptrend. If you want to use the DEW, that's great. If you want to make sure that the MTI is above 1, that's good. That's important as well. And the MTI is currently above 1. Okay. Andrew says on the 5, 8, and 13, why don't you use the 3? That's just the way I didn't create the system. That's just the way this system is created here, using the 5, the 8, and the 13. Again, guys, it's not a science. Okay. And I think the 3 and the 8 probably combined was part of the testing, and the 5 came out to be the best. Okay. Those searches are not in the Unisearch folder. No, Robert. All right. Our sell rule, or our last line in the sand, is when the 5-day EMA closes below both the 8 and the 13. That's our sell signal. Okay. So let's take a look at some close-up, kind of zoomed-in examples, because it's very intricate, and each day is important. Right around the time that you get your signal. So again, the buy rules are: you got your bullish market timing signal, right? MTI above 1, DEW up, confirmed up, GLBRT kicker up signal. Just make sure that you got a bullish market timing signal. We need the price of the stock to be above the 50-day moving average. Now, the 50-day moving average is the moving average here in pink. And in this area here is when price first crossed above the 50. So you can either have price first crossing above the 50-day moving average, or have price already residing above an upsloping 50-day moving average, recently pulling back to it, and you could still get your signal. And we'll look at both examples here in a little bit. But here is an example of where price was well below the 50 for a while, right? The 3 moving averages are the 5 is the green, the 8 is the red, and the 13 is the blue. Here, the 5 is below the 8, the 8's below the 13, and then price kind of capitulates there for a little bit, begins to move higher, starts to approach the 50, and that is when you get the squeeze. That's how the name was kind of derived by the before the setup, before the entry, you got your squeeze of those 3 EMAs. That is an indication of what? If the short terms were below the longer terms, that squeeze indicates a weakening downtrend and a potential reversal, a potential change in trend. You actually got the 5 crossing above the 8, the 8 crossing above the 13, right in this area here, and you can see how the bands or the moving averages then begin to fan apart. What does that tell us? What does a 5-day EMA above an 8 and an 8 above the 13 tell us about the short-term trend of the stock? It tells us that the short-term trend is now up. It wasn't up for a while. It has just turned up. We, though, wait for price to cross above and close above the 50-day moving average to give us our signal. Price crossed above the 50-day moving average there. You also had RT rising over the last 3 days. There is your signal. Jose is asking how strong has the squeeze has to be. I'm not sure how to answer that. I'm not sure if there's a strong squeeze or a weak squeeze. The squeeze is when they all cross at the same time. And it's not here where you're considering taking the trade. It's when price crosses above the 50. So when price crosses above the 50, in retrospect, you're seeing the squeeze happen, and it's going to happen the same way with most stocks. There's no strong squeeze or weak squeeze. Okay? They're all going to overlap at the same time period. All right. The sell rules are when the 5 closes below the 8 and the 13. Okay. That is your last line in the sand. Now, there are going to be, or there might be warning signals prior to that crossover. So here is when the crossover actually occurred, right? When the 5 closed below the 8 and the 13. That is your last line in the sand. Excuse me. There are a couple of warning signals that you may want to consider or even take action on beforehand. And that's when the 5-day EMA goes below the 8. Okay, you see that squeeze there when the 5, which is the green line again, approaches the 8. Both are now down sloping. Price is pulling back for sure. But you're waiting for a more meaningful change in trend before you take the position off. This is a strategy that, and I'll show you a couple of trades that I'm actually in right now in our swing trading coaching group. 2 EMA squeeze techniques, strategies that I'm currently in, 2 stocks. But the idea for this is to stay in the trend for as long as possible. As long as that 5-day EMA stays above the 8 and the 13, you're in good shape. Stock's rising, so you want to stay in as long as possible. And I've seen these trades last months. As long as the 5 stays above the 8 and the 13, you're staying in. Now, you may want to consider taking profits or taking some sort of action when you see the 5 and the 8 begin to squeeze. You might even see a price to RT divergence, price moving higher, RT moving a little lower before price actually changes direction. You might want to take action on that. If you're really got a substantial gain, you don't want to give anything back, and you're happy with the returns that you have. Okay. Also, when you see an over-exaggerated widening of the gaps between those 3, between the moving averages. Okay. We talked about earlier how do you know if price is overextended? Well, if price moves further and further away from all your moving averages, eventually price is going to come back and revert back to it. And again, it depends on your objective on the trade. If in a week or two you have a 7 to 10% gain, and you see price a little bit overextended, and you want to take profits because you see price pulling away from those moving averages, by all means take profits. What I want you to understand, though, is your line in the sand. Everybody has their own, satisfaction level when it comes to short-term profits, and that's when you'll take them. But at the very latest, when that 5 closes below the 8 and the 13, you are going to get out of that position. All right. So outlook, right? It absolutely can. You can also use it on today trade as well. You can use it on any time frame. All right, so here's Mesa, just an example, guys. I'll get into the program in a little bit, but I want to show you some examples here on some real stocks. Here's Mesa. This is back in 2022, December 2022. So let's look prior, though, before this green arrow, what was going on. By the way, the yellow line is the 50-day moving average. And what did you see price do Short-term moving averages were below each other, EMAs, and then price began to capitulate, began to rise and approach the 50. There's your squeeze. It's going to happen every time the same way, where you have them overlapping and just sitting on top of each other. Then, and here's why on this day right here, I don't consider that your signal. Because even though price did close above the 50-day moving average, and it did so on really good volume, and you also saw increasing volume during the squeeze prior to the price crossing above the 50. Because one of the rules is that, yes, price needs to be above the 50, but on that day, I didn't quite see the fanning action just yet of those three EMAs. I did begin to see, and you can see them begin to separate here on this day. That's my signal day. That is a meaningful change in trend. The price is now above the 50-day moving average, your moving average, RT above 1 and moving higher, good volume coming in, and your three EMAs beginning to separate, telling me that the short-term trend, which just changed from down to up, is strengthening. Okay? So that the buy signal there was on January 3rd, 2023. So just last year. Didn't sell until this area here. That was February 24th. That shouldn't say 2027, should say 2023. So you're in the trade almost 2 months, month and a half, almost 2 months. And your sell signal was finally here when the 5-day EMA closed below both the 8 and the 13. Okay, you have multiple buy signals. So here's HPS, multiple buy signals here. In this case, here on January 10th, price had just crossed above the 50, didn't it? So that was your initial buy signal. Your three EMAs began to fan apart. Your RT was moving higher. Price had just crossed above the 50 after being below the 50 for a little bit. So that was your initial signal, right? Continue to ride the stock higher as long as price stays, as long as the 5-day EMA stays above the 8 and the 13, you're staying in. Here, end of February, beginning of March, what did we see? We saw price slow down and momentum begin to dissipate. We saw those three EMAs. What's the word that we're using? What did we see them do here? Squeeze together. However, price remained above the 50. After the squeeze and then the fanning apart of the three EMAs, there's another buy signal. Price didn't have to cross below the 50 and then cross back above the 50 in that case. Price just needs to be above the 50. Your initial signal is when price it was below the 50 and first crosses above the 50. Same thing here, April 28, 2023. You're staying in the trade the entire time. Price begins to kind of soften here, approaches the 50, starts to kind of move, drift kind of towards the 50, right? But stays above the 50. You had your three EMAs squeezed together. And then the trend resumed. Your three EMAs began to fan apart again. That was another buy signal. Okay. I'm going to move into the program now because I do want to show you that scan. Let me show you something here. This is my account, guys, by the way. So I'm going to go into this folder here that you guys don't have. This is called Mastering Moving Averages. This is these are the searches that you guys will get once you take the course. And again, we'll talk more about the course here in a little bit. But here is the EMA squeeze. Here's the EMA squeeze. Not going to go through the parameters. The parameters, how they're laid out in the search, finds what we need to see on the chart. So let me just run the search as of right now. How about that? And let's graph the stocks. And let's look at the chart. And here I have the EMA squeeze layout on. So price of the stock, 50-day moving average in green, RT down at the bottom in red, which just has crossed above 1 recently, by the way. It's trending higher, which it needs to do over the last 3 days. It's just recently crossed above 1. I'm going to take price off for a second. You tell me, is what we see on the hard right edge exactly what we saw in a number of the examples that I just showed you, right? There's your squeeze. Price is below the, let me put price back on. Price is below the 50, approaches the 50, 3 moving averages began to fan apart. Hard right edge is really the important area because as of the hard right edge, you need them to be fanning apart. But we began to see the fanning apart of those 3 EMAs maybe a few days ago. Price just recently crossed above the 50. This is a trade that I love. I would take this trade. Okay, let's look back historically, just recently, at some of these other examples with NVO. So based on what you know so far, was this area right here an area that you could have taken NVO? Yes, right? Price was below the 50, crossed back above the 50. The 3 EMAs began to separate. Right in this area here is where I would have taken the trade. Okay? When would I have exited this position? Well, it looks like the 5 approach. Did you get your crossover? That's what I'm getting at. It looks like you did. Let's see. But you didn't. The 3 moving averages didn't cross below each other. So you could have stayed in. Let's give us a buy price first, though. 103.48 roughly. About 103.5 would have been my buy price. Hard to say because there was your signal. And the following day, the stock opened at 102. Let's just say 103. 103 roughly is your cost basis. Let's take price off and let's move forward day by day and see when we would have exited this position. Okay, maybe getting close to exiting, right? You got your 5 converging towards the 8. Oh, didn't close below the 13 though. Stock price continued to move higher. We're staying in. What did we say about reducing noise, guys, right? That's one of the first things I led with today was this is moving averages help us reduce noise. With this technique, you don't even need price on to manage the trade. Take price off. Completely eliminate the noise. Because it's the moving averages that you're using with this particular technique and all of the other techniques, by the way, that we teach in the course. You're using the moving averages to help you manage the position. Okay, let's keep going forward. All right, we're close here maybe. All right. Did we get the crossover? Five-day is below the 8 and the 13. Okay, so as of the close of this day, March 25th, I got my signal. I plan on closing this position on March 26th, if that's truly the next day. 25th could be a Friday. If price continues to move lower, keep that in mind. I'm looking for downside follow through the next day. Didn't get it. All right. The low of 128.78, which is the low of my signal day, is still going to be what I use to close the position, even though price went up the next day. If it keeps going down, I'm going to get out. All right, I'm out. I'm out of the trade. Okay, at about 128. When did we enter? Hold on one second. Yeah, when did we enter? What was the price again? What do we say? 103. All right. So about a $30 gain, almost a 30% gain there. You had some noisy areas, but your moving averages kept you in. Let's look at the next entry with this one. Okay. So you got a bearish crossover. What did price continue to do? All right. Well, good. Continue to fall. Fantastic. We got out at a good time. We didn't give back too much more of our profit. You gave back some, of course, right? That's going to happen. But we didn't give back too much. Let's see. Now prices went below the 50. All right, so let's see. Price crosses above the 50 here. Is that a signal? No. Why? Because the 3 moving averages, the EMAs, are not separating yet. They're just beginning to squeeze. All right, so let's go forward a couple more days here. All right, we didn't get any sort of follow through at all there. All right, price gapped up there. I'm beginning to see the squeeze here. I'm sorry, the separation. Didn't quite see it there. Beginning to see it there. And volume is coming in. All right, guys. So we have a signal, right? All right, good. 129.21. I need follow through the next day. I got to make sure price moves higher the next day before I take this trade, because you're observing this as of the close of the day. Well, no follow through. All right. Well, no follow through the next day. All right. Forget this trade, right? We didn't get follow through. It's now that we're starting to see what we wanted to see back at the beginning of the month, right? Price now making new short-term highs, price staying above the 50, and those three moving averages separating. Okay. Yeah, Larry says, how do you deal with company reporting earnings that are unexpected, such as with BLDR recently? Seems that moving averages would not be applicable. There's nothing you can do about that. It's not part of the trading strategy. Now, whether you take the trade or not right before earnings is up to you, and you're going to have to deal with the consequences or success after they report. Right? If you're in a trade on earnings day, you had to have known that they reported on that day, and if they don't beat or whatever, and the stock gaps down 20%, nothing you could do about that. Nothing you could do about that. So not part of this kind of strategy. Okay. All right. So here are two trades that I'm currently in our swing trading coaching group portfolio. NVDL and TQQQ. NVDL is a double leveraged NVIDIA ETF, and TQQQ is a triple leveraged NASDAQ ETF. And if I plot the charts, here is the same setup. Now I took the NVDL trade here. Actually, before that, day before that, May 3rd. Okay. And I'm using the EMA squeeze setup, and I'm staying in the trade as long as the 5-day EMA stays above the 8 and the 13. This has been noisy, hasn't it? Or at least non-directional, pretty much since I took the trade. I'm up a couple percent. What am I up? 4% on the trade, not too bad. Up 1.5% on TQQQ. But these were just trades taken recently because of the EMA setups that have both occurred recently. Here with TQQQ, right in this area here, as price crosses above the 50-day moving average, and you begin to see the separation of those three EMAs after the squeeze. Two real life trades that I'm in right now with the using this technique, the EMA squeeze. Okay. Pete says, don't play with earnings. Yeah. Here's what I would say about earnings. I'm just going to look at that one stock, for example. Was it BLDR? Put a 1-year chart on. Whoops. Put earnings per share on. Yeah, that's a shock, right? Because if I put earnings per share on and just look at the last year, it seems like they've done a pretty good job of growing their earnings. You put the earnings dates on, and I like to see how the stock behaves at earnings time. Give you an idea of maybe your likelihood of kind of the same type of price behavior. You had a mixed bag here where the stock went up a couple times and just fell, but again, nothing you could do about that. That's unfortunate. All right, I'm just going to fast forward here, guys. Remember, I'm going to give you guys the slides. You stuck with me to the end. I'm going to give you guys the slides here so you get those examples that you can refer back to. So the setup, the hardest, most time-consuming part of swing trading is to find the right stocks with the correct setup early in the trend, early when that trend changes. 3 ways to make it easier. You can use the stock viewer, allows you to rank, sort, and analyze the best candidates quickly and easily. You then apply the moving average layout of your choosing to identify buy and sell signals. You can use the watch lists as well, okay, to help you find stocks. My preferred method is the Unisearch tool. I was just in the Unisearch tool there. I showed you guys the EMA squeeze search. Again, that is a search along with, there's a bearish setup as well. Let me go back here real quick. So as part of the course, you're going to get the EMA squeeze play a search long. That's a bullish search. You're going to get the short scan as well. And you can see we have a couple of other short scans that you'll get as well. That's the best way, I think, to find stocks, is not having to look at different stocks, but running a scan to bring you those stocks. Okay. Key concepts: just use the graph history to give you confidence. So that NVO stock, right? So when I ran the EMA squeeze as of right now, it found NVO at the top because it was displaying currently an EMA squeeze setup. But we looked historically, and we looked for this at the same situations historically that's going on right now. Gives you a little bit of confidence. Hey, this is how the stock behaved after the previous few setups. Gives you high probability moving forward. Using graphs, you can visually see the best setups for entering a trade and when you need to prepare to exit. So what we covered today were 5 key ways to use moving averages and the EMA squeeze, which is a complete system. In the slides, we lay out the buy rules and the sell rules. There should never, ever be a time where you're asking yourself, what do I do here, right? Pretty much every basis is covered. When you should be buying and when you should consider selling. That's just a recap of the buy and sell rules. You know, DEW up signal, or a confirmed up, or a GLBRT kicker up, or the MTI crossing above 1 and being above 1. Those are all bullish market timing situations, and that's okay to take long positions. You want the price to be above the 50, whether it just crosses above the 50 or already resides above the 50. We want that intermediate term trend to be up. We also want the 5, at the time that we buy, we want the 5-day EMA to be above the 8 to be above the 13. But prior to that, we're recognizing and observing the squeeze, which is that quiet period before a change in direction, a change in trend. We want RT to be trending higher. And the sell rule is the 5-day EMA closes below both the 8 and the 13. That is your last line in the sand. We did go through some warning signals prior to that crossover occurring. Averages course. Here is all of the content. There are 10 full lessons. This is one of our more kind of expansive courses. There's a lot of lessons in this course. We start off with the VectorVest system, just some basics of understanding moving averages, how to trade using single moving averages as support and resistance. We'll go through the EMA squeeze trading system again, and the reverse for the bearish side. Another multiple moving average trading system called the Guppy. The Guppy trading system, it uses, I think, 10 to 12 different moving averages, but the moving averages create trading bands that help us identify buy and sell signals a little easier. It's not just a jumbled, hey, here's 10 moving averages, and very easy to understand. So it's a complete trading system there as well. One of my favorites, I like the EMA squeeze. I love this next one, surfing the reversal waves. This is one that I use in our swing trading coaching group portfolio a lot. Another complete system using moving averages and Bollinger Bands as well. The Midas Touch, which some of you might be familiar with, that's a moving average trading system. And then we'll do a bonus system called high-low moving average bands. Okay, so I'm going to have Jim type in that address that you guys see there at the bottom, www.vectorvest.com/MA, stands for moving averages. You go there. It brings you to our university page where you'll see a price of $295. Normally, the price of this course is $595. I want to thank you guys for being here. It's really nice to see you guys taking time out of your midday. We started at noon here, so take a time out of your day. I want to reward you guys for that. So knock $300 off the regular price. Here's what you're going to get: 6 live mastery support sessions. When you register for this course, you go into the university, you see the course there. All of the content is available to you. All of the lessons are there for you to watch. All of the old mastery sessions that we did a few months back are there for you to watch as well. Those are all recorded. We, as a class, coming up in a couple weeks, will be starting our live mastery sessions. Okay. and that begins on May 28th, 2 weeks from today. So you're going to get 6 live mastery support sessions. You're going to get access to, for 70 days, to VectorVest US Premium and Intraday Canada if you don't already have it. Okay, so if you're a current subscriber and don't have the premium real-time US platform, we will give it to you for 70 days. That's basically the duration of the course. If you're a non-subscriber, we are of course going to give it to you for 70 days. The US real-time program and the Canadian intraday program. Access includes to those products Pro Trader, which is important for us because we want to use moving averages in scans, and that Pro Trader tool will help us do that. And also the Auto Timer, which is the back testing tool, and the Portfolio Manager. Okay, so the bonuses are the Pro Trader technical searches. You'll get that for 70 days. It also includes not only moving average searches, but indicator crossover searches as well. MACD, Bollinger Band, stochastics. You can use a lot of those scans in there to find bullish technical indicator crossovers. Okay. Not only are we going to do 6 live mastery sessions, but we're going to do a bonus session as well. So it's basically like your 7th mastery session. We'll do that live as well. Here are the dates of the live sessions. Now think about it. We have 6 mastery sessions, but we have 10 lessons. That means that we had to bunch a few lessons together at times, which completely made sense because some of the lessons are a little shorter than others. So you can see the lessons that we will cover Tuesday, May 28th, just lessons 1 and 2. Session 2 will cover lesson 3. Session 3 will cover lesson 4, and so on. And those are the dates. When you register for the course, you will get all this, guys. You'll get an email with all the dates and directions on how to access all the material. You'll get all that when you register for the course. Okay? Again, here are the 10 full lessons. And I want to just take you quickly through a couple of emails that Stan Heller received. Now, Stan Heller and I are the ones that used to teach this course. However, I will be the instructor here as along with Rick Franklin. Rick will, he's our new Canadian consultant alongside Stan. He will be delivering mastery session number 5, and I'll be doing the rest. I know a couple of you guys asked who'll be teaching it. So I'll be teaching most of it. Rick Franklin, who is our Canadian consultant, will be teaching mastery session number 5. Stan Heller and I will be the instructors that you hear in the modules, the pre-recorded modules that you'll have access to once you register. So Robbo sent an email, said, thank you once again for a great presentation on your multiple moving averages. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information. I really like the 20-day MA channel search. That is, again, a search that you guys will get as part of the course. I think the MA course should be a fundamental course for new and experienced VectorVest users. It has been very educational. Look forward to using the setup searches of the program to advance my investing success. And here's Warren G., not the rapper, from what I understand, but he said, after taking the MMA course, I am now able to better determine entry and exit points. And he goes through his old way of doing things compared to the new way of doing things, applying these moving average techniques, and the difference between his win-loss ratio. He said, following an old plan would have 51% winners with very little monetary gains. If he would just follow the 20-day moving average strategy in his positions that he was in, he'd have over 75% winners with the largest portfolio gain. EMA squeeze, 84% winning trades with the second large portfolio gain. Golden crossover, 64% winning trades. He says, I would gladly take half of the portfolio gains in any of those strategies. Okay. If you have any questions whatsoever, you can email me, jerryd@vectorvest.com. You can give our support department a call if it's something urgent that you really want, that you need help with. Go to that website, vectorvest.com/MA. And I think Jim put it in the chat box. He did. You guys go in that chat box, you can click on it and it'll bring you right to the details page. Okay. Andrew says, Jim, will the course run during open market hours? Yes. 1 o'clock. So we start on the 28th. And the sessions begin at 1 p.m. Eastern time. So yes, right after lunch. Okay. I'm going to stick around for a few more minutes. Thanks, Jim, for being here, man, and flagging some of those questions. Yes, Eric, you're an elite member, Eric. So if you're an elite member, the elite rate, guys, is $297.50. So you save a few bucks if you register now. Your elite rate, guys, is always $297.50. Folks, this $295 rate, if you're not an elite member, will go away in a couple of days, and it will revert to the early bird rate of $395. So save yourself $100 by registering now. I have a few more webinars this week, but once they're done, that $295 rate goes away. If you're an elite subscriber, you'll always pay $297.50. If you want to pay $295, you can click on that link. Yep, so I said 1 o'clock Eastern time there, guys. That's Eastern time. Monica asking, can the strategy be done end of day or need to upgrade to real time or intraday to be successful? No, it doesn't require real time data, but it does. Running the scans requires Pro Trader. So at the very least, you'd have to add the Pro Trader module to your account if you didn't want to upgrade to the real time program. Follow through is important. So if you have another way of looking at real time prices, then okay. But you get your signal at the end of the day. But the follow through the next day is important, and you need real time pricing for that. All right. Excuse me. Good. Andrew says, I totally agree with Robo's testimony. I learned how to use VectorVest software at a much higher level and profited with much more confidence. Awesome, Andrew. Good to see you here as well. Yes, guys. Oh, man, I'm sorry. The slides. But you reminded me, so that's good. Let me just create the... a second. Let's see. I'll put them in the handout section of your go-to webinar control panel, and I'll let you know. I'll let you guys know when it's there. Let's see. Handouts. We're going to choose a file. Nope, I'm not going to do it that way. Appreciate you guys reminding me though. Okay, just dropped it in the handout section. You should see that in a minute. And it should be there now. Do you guys see it? Mastering Moving Averages PDF. I hope it's there. Yes, good. Thank you. Awesome. You have access to the course. Thank you, Fred, for a year, full year. You have access to the course material for a full year. Yes, this webinar is being recorded. You'll get an email with a link to it later this evening. Okay, so yep, thank you guys. Neil, you should see those. You should see the slides. It's in the handout section of your GoToMeeting control panel. It's a PDF that says Mastering Moving Averages promo. Real time starts. You mean when does your real time subscription start? That's a great question. Let's put it this way. It should start actually immediately. Say the 14th. Yeah, it'll start immediately. So if you register, you'll get it immediately, and that will take you out 70 days to the duration of the course. So if you register today, you'll get it today. If you register 3 days from now, that's when it will start. All right, good. Awesome, Jose. Glad you enjoyed it. All right, guys, look, you have my email address, jerryd@vectorvest.com. If you have any questions, shoot me an email. The $295 rate will only be available for the next couple of days. So ton of information, guys. It's a great course. You have to learn about using moving averages if you're a serious investor and trader. There's trading systems that you can use, just that center around moving averages. So a big part of your investing toolbox is to learn all about how to use moving averages. All right, Rajendra, welcome. Rajendra says, I'm in. Awesome. See you guys soon. Again, we start in a couple weeks. Any questions, shoot me an email. Thank you, everybody, for joining me. We'll see you soon.